So I'm making this video to expand on the when to buy short that I just made. And the biggest thing I want to address is the fact that people are trying to time the market. And I know I said that you shouldn't try and time it. And if you are, bullish on like a coin or stock and stuff like that, you're ultimately, you develop those bad habits. You're ultimately going to end up losing revenue over the course of time. You may get it right a couple of times, but more often than not, you're going to get it wrong. But the biggest thing that you should look out for, especially if you're talking about crypto, if you're buying a coin, if you know anything about crypto cycles, and you're buying a coin or an asset 80% off or more, you should know that you're making a great buy. If you're bullish on the coin has utility and stuff like that, you are making a great buy. You should know that, and that should be your comfort when you're buying these assets. Trying to jump in and say, oh, well, I want to catch it at 4 cent versus 6 cent and stuff like that, that's going to get you caught, especially if you're trying to track like the macros and stuff like that. We see the games that the Fed has been playing. This isn't new. They've been playing these games since last year when they refused to admit that we even had inflation to begin with. So even these spikes and stuff that we're seeing here, that's why I always said that 5 cent, 6 cent, even though the 6 cent mark has done well by us and has held up its position as being a floor. But when you have the opportunity to average down, you have to seize those opportunities here because you can't predict or time the market. That's why I always say that I'm always buying a little, but I look for the opportunity to go in a little bit more, obviously, if it presents itself, but I don't simply just wait. The market in general is geared to go upward. So, it's kind of like the old analogy, timing the market is better than timing the market. And that remains true today. So that becomes like an issue here because even though I'm waiting on some reversal numbers, we do have evidence even in gas prices and with the CPI numbers that we are getting some relief from the inflation. We're going to have to wait and see as far as for the numbers for next month, but this could be just a cool off period. Not saying that we're going to have to just go rampant in the market because everything's going to go back to normal. Obviously, 8.5% is a long way from 2 or 3%, but we're going to have to factor in now that the market may reconsolidate and it may not necessarily go completely bullish or just take off to the moon, but it may ascend or it may not rest at those levels that it once did for the previous 4, 5, 6 months. So we have to kind of be prepared for that. That's why you take advantage of these opportunities here. When the CPI numbers came in and I said this is evidence of a reversal, you have to factor that into your investment cycle here. The investment cycle, the macros, everything, these are all moving targets. They're always changing and adjusting. That's why I cover macros frequently. That's why I do my weekly Zoom meetings. Everything's always changing and you have to be ready to pivot. But if you're long term and you don't want to stay on top of all the current events and stuff like that, you're going to come out better just DCAing and buying in overall consistently over the long term. But I know a lot of times people want to try and time and get better entries and stuff, which is fine, but you have to make sure you do your homework. So just wanted to provide that a bit of an explanation and a deeper thought on that short so that you guys can have a better understanding. So I'll see you guys tonight.
Try.